Welcome traders, my name is Adam Harris. I'm a chief market analyst. Let's have a quick look at the economic calendar. So this week is an unusually busy week. There's a lot of big stuff happening in it. For example, finishing on Friday is the really monthly big one. This is the big mover in the markets. This is non-farm payrolls, jobs numbers coming out of the US NFP. So for newer traders, this is where you get your kind of largest monthly volatility. It's not a good time to trade it, obviously in terms of increasing probabilities. It's not a great idea. So the next thing I want to do is focusing on out of the UK, because the US economy is doing really, really well. I expect the jobs numbers to be break even or slightly less or another banger surprise, but I'm not worried about the US economy. Deficit spending does need to be brought under control, obviously. And let's very quickly talk about global inflation. So basically we still have some inflation hanging around, and it's almost exclusively as a result of corporations getting greedy and just shrinkflation combined with them just eye gouging in terms of prices, just gouging us in terms of that. So that kind of spending from corporations charging those prices is going to have to come under control. That does mean that if they don't do it, eventually we're just going to spend less, people are going to start cutting back, and they're going to be forced to do that, which I want to prepare you means that companies are going to eventually start to report poorer performance and lower earnings. And that's a good thing. It doesn't seem like a good thing, but it really is. They've been so greedy over the last few years, in reporting record earnings, but they've been doing that at our expense, and they need to come back down in line with that, and that will bring inflation back in line. And actually, so when they start reporting those reduced earnings, you need to understand that's their own fault, and it's a good thing for all of us. At the end of the day, they've created a bubble of their own kind of making, and then that needs to burst. Next up, when we look at this out of the UK, I want to have a look at PMI data coming out of the UK. And out of Europe, I want to see what's going on with regards to the ECB interest rate decision. I want to see if they're following the US to create a similar template for success. You need a strong middle class. You need to do that. You need to tax the upper percent. You can't have the upper 1% paying less taxes than the middle class. You can't have that. That's ridiculous. That's not good for any economy. Trickle down doesn't work. So they need to get that stuff under control. And we need to see that happening, which means, and there's so many elections this year, we need to make sure that the right kind of people who put the country's interests above their own, we need to make sure that these kind of people are getting put into those positions, which impacts economic policy. So if you're thinking politics doesn't belong here this year, right now, in this time of our lives, politics really, really matters, and there's a lot of that stuff going on. That being said, that's what I want to watch for: the housing price index out of the UK, PMI data, as well as what's coming out of ECB with the interest rate decision. Anything related to that, I think, is worth just being aware of. Kind of what is the tone? Are they concerned about things? Are they worried about stuff? Especially as we were informed that we, officially, technically in a recession in the UK. We'll see how that goes. Now, let's move on and have a look at something else. Before we kick off onto the charts, I want to invite you to an event if you are in the area. So next Friday, which will be Friday the 8th of March, I will be speaking at the London Trader Show. I normally get invited to speak there. I usually speak once or twice throughout the day and then mingle around and just say hello to everyone. I will only be there for the first hour in the morning. I'll be speaking at 9:35 in the morning. If you are in the area and you want to say hello, it'd be great to see you face to face. You can use this code Harris50, which will be used for either 2 complimentary entry tickets or a £50 discount off the silver or gold ticket. I'll be there. There'll be lots of other people there. You can go and meet people if you want to do that. And there is actually a link for this to register, which I will provide either in the description of this video or in the comment section below. Just need to remember to do that. I'll put it in the comment section, and you can follow through and register if you want to come through and just say hello. There's lots of other stuff there, and mingle with other traders and find some interesting things. I have another, unfortunately, I will probably not be available after 11 a.m. I'll be busy doing some other stuff there. I have some other engagements. It's going to be a crazy day. And then the following week, I'm actually in Bali for a trading conference. So it's kind of a crazy period. And then again, this year I'm in Jamaica. In April, I'm also in March, April, that's right. And then end of April, I'm in Cyprus doing some a sailing event, a personal private thing. And then I'm in Canada, and there's a whole lot of other crazy stuff. So just to let you know, but if you are there Friday, it would be fantastic to meet you and put faces to names. And of course, anyone else I already know, if you're there, that would be great. Okay, so when we look at the charts, let's look at that volatility index, the VIX. It's still operating near the lows, near the lows, near the lows. Market is calm, market is nice and happy. Let's look at the dollar index. So dollar index is producing potentially a head and shoulders pattern here. So I'm looking to see if we break the low over here. If you look at the weekly, we haven't really done much the last 4 weeks. So every time I produce one of these videos every week, I do want to be able to go, finally, we've got some clarity in terms of direction here. and we just haven't received any just yet. So it just is how it is, I'm afraid. Here, for example, the euro dollar looks really nice and bullish. That is a bullish setup. We have the potential here for a new trend, which implies, and again, that MACD is about to cross that zero line, which implies that we should see a weaker dollar. That's what it is implying. Then having a look at cable. Cable has also produced a bullish candle, series of high lows in an uptrend off a major level of support at the bottom of a range. So again, that hints at it, but just look at that weekly chart. It's just been garbage for such a, for a long period of time. We'll see, but that's what it appears to be hinting at, is a weaker US dollar as well. Aussie dollar here, potentially an inverted head and shoulders, so a shift, a change in trend. Definitely worthwhile watching this level over here to see if we break that this coming week. But that looks potentially, I'm just going off the daily here. That looks like we might have that. Kiwi dollar was strong anyway, so my expectation is Kiwi should be able to push up higher. We'll see. It's not now. It seems to have lost its strength. Remember that we did have we had the Royal Bank of New Zealand, so potentially that's why they've done that. We're going to have to see how that works. Let's have a look at dollar yen. So dollar yen, I would expect to look strong if we're getting that dollar strength again. So euro and pound looking strong. Aussie also looks strong. Suddenly Kiwi doesn't look strong, and then dollar yen doesn't. So we're getting that contradiction. We're in a range. Please note that we are now in a range for dollar yen. Look at this. Boom. Just want to keep an eye on that. Okay, so we've lost that bullish momentum, and it looks as though it wants to start a retracement. So in fact, on this one again, we could still see a bit of a correction. Let's look at dollar Swissy. Dollar Swissy double topping there. Have we got bearish divergence? A little bit, not a very strong amount, but so it makes sense that what we will probably see this week is a bit of a move, just a bit of a move to the bottom of this. This is also now a range. So potentially this week, just seeing it come down a little bit. And you can see it's bumping its head up here against the moving average, and it's in a downtrend here. So I really think we're getting mixed signals here. For example, this here looks as though it's trying to turn around, looks as though it's trying to go up. The trend was looking nice and strong. Dollar yen is battling up, bumping its head against that 150 area. We're really getting a lot of mixed signals here. This happens. It does happen from time to time. The thing is, you just want to be able to identify when it is happening. Look at this as well. So this is dollar CAD. Dollar CAD is creeping up. It's now above all the moving averages, which means in a way it's free to keep going higher. It's got less resistance on the way up, and you can see it closing higher so far, but it's also wishy-washy, and so it's also within this kind of range over here. Just it's very messy. Let's have a look at gold. Gold, beautiful. There we go. Solid boom this week. So that was a no-brainer. That has performed incredibly well. Well, what I mean by that being a no-brainer is we spoke about it in previous weeks of it breaking through here, a bit of a consolidation, nice little break up and a retest there and a continuation up. It's impossible to predict when it'll have a boom like that, but it looks good. And that's a solid weekly candle closing right here into that danger zone. For the most part, I would say, ladies and gentlemen, this is going to continue higher. Okay, silver as well managed to do its turnaround that I was expecting to do the previous week, and it looks pretty good here. So I think for now, my expectation is to see that continue to go higher. When it comes to gold, it's overextended on the daily. I want to see if we potentially get any kind of a pullback here. What could happen is we get a break higher, then a pullback, as opposed to a pullback first and a continuation. But in principle, at this time, for me, I would say that there's no doubt that the trend for gold is to the upside, and therefore I'd be looking for buying positions. Let's have a look at natural gas. Natural gas continues to just keep checking the lows. So far, just going lower and lower and lower. It's still sitting near the bottom, so no clues there just yet, and nothing worth mentioning. There we go. Crude oil's pushing a little bit higher here. Very, very nice. Bit of a break to the upside. We've been talking about that. Now they're going to start to head into a little bit of resistance into these areas here. So I still expect that to push higher. Let's just check that with West Texas. Same thing, there's a level of resistance here. It should be able to get through that. So for now, I expect that to go higher. So again, those hint at a weaker dollar. So interesting. We're getting, compared to say 2022, everything just suddenly the dollar started to become the center of the market universe, and everything just orbited around that. Now we're seeing a lot of just breaking away from that. And that is, to me, is an incredible sign of a healthy market. Again, I'm testifying on the record that I think we are potentially at the early stages, certainly in the first quarter, of potentially a golden era in terms of market growth. So I think, and for me, that's based off all the different things I talk about. We've had two really big corrections in the stock market. We've got this this kind of completely different behavior across the boards. Maybe it'll be different 6 months from now, but right now, all of those signs kind of point to us being in the early stages of a really, really good run for now. And that's why, because of that, with the high interest rates, my expectation is we won't necessarily get any rate cuts. We're not going to get those rate cuts until the entire market across the board is obviously clearly in a bubble. We're getting a few individual stocks in bubbles, which can happen. We're getting housing, potentially housing or vehicles in their own different kinds of bubbles. And those bubbles need to burst because they are, very popular right now. Maybe cryptos will form a bit of a bubble. But in terms of there being a market-wide bubble, it isn't really there. And it's not one of those things where I'm going to look back and go, oh no, there were signs. I'm looking for all the signs, and you get lots of signs. We're not getting it. Markets, when they are fearful or greedy, they tend to do certain things, but there's no signs of fear. Doesn't mean we are walking into a trap, but this idea that there's constantly a trap around the corner, it's going to blow up in our faces, is just because we've had a few years of terrible stuff, and therefore we just expect everything to keep getting worse. And that's kind of the sentiment right now. But there have been plenty of periods where we've had a golden periods, and from 2000 to 2007, for example, was just fantastic, and we could be in one of those periods. So what I'm saying is not to say we won't have bubbles in our future. I'm saying that we're nowhere near that. We're in the early stages before we might get to that. There's no tequila in the punch bowl. We haven't reduced rates. We're not creating those same types of problems. And yes, we can always look at black swans. In this case, a black swan could be something like World War III or something like that. But there's nothing in the market right now, per se, with the existing stuff that's going on. We'll see. There's lots to talk about, lots of those other potentials, but I'll cover that on investing.com in separate videos. Let's just keep moving through this. So let's look at the indices continuing to produce fresh highs, looking nice and bullish. There's a beautiful break and a retest. So my expectation here, continuation to the upside. It's moving at a very steady pace on the weekly. So looking at the daily and the weekly in context, they are beautiful. They are steady. There's nothing overextended over that. They're not overvalued. They look amazing. They can keep going. When I look at it from a monthly perspective, it's potentially a little bit far away from the moving averages. But if it keeps going at this rate on the weekly, it's not really going to be pushing its luck. Does look like it's eyeing out that 40,000. So that's really what I'm interested in seeing for the fun of it. Remember that the markets, let me just sum up with one thing here. The markets are supposed to create all-time highs. The indices are supposed to create all-time highs. As a human race, and we're expanding, and new ideas and new products and people spend and people living, these markets will continue to create all-time highs. There's more people on the planet. There is double the number of people on this planet than there were when I was born. Double. Okay, so what that means is that the volume, when you hear about, the market cap of something is whatever it is compared to what it was a few years ago, it's supposed to be. There's more of us spending more money, more people engaging in the markets. The market cap will increase. That is in itself not a sign of a problem. So there's a lot of stuff out there which creates paranoia, which is very deconstructive, and is in itself illogical the second it's built on funny premises. Okay, so let's have a look at the S&P 500. It's all beautiful. Look at the quality of this trend, guys. Beautiful pullback, bullish engulfing candle, takes off. Weekly angle, momentum looks amazing. The only areas where I'm looking at it for now are the monthly, a little bit far away from the moving averages, but you can see in the past we've ticked away and gone for a year before we had that correction. I think we're potentially, let's consider the possibility that we are in one of those scenarios now. We've got NASDAQ also looking amazing. There was a beautiful bump to its head here, pull back, and then continue to the upside here. It looks really good. This is similar to what I was talking about with gold. Gold is this pulled back and then took off, and gold is in a similar situation. Is it going to pull back from where it is now and then carry on, or is it going to carry on and then pull back? It has either of those two options there. Russell 2000, beautiful, very nice pullback and a continuation. And ladies and gentlemen, let's celebrate and just pause for a moment and realize that the Russell 2000 looks as though it's very much on its way to breaking out of this range that it has been in since 2022, and that is significant. We were talking about how that's likely. When I say we, I mean the royal we. We've been talking about that breaking out. Next up, we have the FTSE 100, which is also very close to breaking outside of its range. Let's just widen this up so we've got this going for a little bit longer. And that is also looking good. So we're not there yet, but I want to see that breakout. Again, let me remind you, indices are supposed to go to all-time highs. And the weirdest thing is I see it now and somebody commenting on Twitter saying, this index is broken to all-time high again or create a new all-time high. And there's almost a sense of fear around it. The very fact that it's creating an all-time high is reason for panic. That is insane. Okay, that is absolute insane. The fact that we are getting new highs every week is sign of growth. Okay. That's what's supposed to happen in a healthy market. We do live in a bit of an upside down world. We live in the worst timeline, and things that are good for us, people say are bad, and things that are bad for us, people are saying are good. It's absolute craziness. So have a look again here, looking really good. Overextended, any pullbacks would have been or will be a good buying opportunity on the DAX. The DAX is on fire. We've got the ASX 2000. There was a really good solid breakout of these levels, looking very good. And very important, ASX here, ladies and gentlemen, has pulled back. It has just taken off away from the moving averages. It's not that overextended on the monthly. It's been consolidating and broken through. I think the ASX has got more potential upside than some of the other areas there as well. It looks amazing. Nikkei. Nikkei weekly is just going. Yes, the Nikkei is probably doing the most catch up because it's been consolidating for the longest period of time. Therefore, when I say it's doing the most to catch up, I mean it's having the bigger run right now because it has been cooped up for, going back to 2020. It's doing really well. So it's very, very hungry. At some point, yes, it'll have a bit of a correction. I highlighted 40,000. Looking at this, I'm not actually even really convinced that's going to be the case. I think I need to update this. I'm going to move it to 42,000. I mean, at this point, I'm just picking round numbers, but it's not there yet. So are the markets, okay, let me put it another way. Are the markets going parabolic? Yes, they are. And when they go parabolic, they tend to have a relatively strong correction. But there's so many things about this that look good, that look healthy. They've got like a healthy pulse. If I was a doctor and I was looking at its heart rate, they look good. It just looks as though right now they're just very bullish. And when we'll have a correction, but that correction could be 8 or 9 months away, and that correction will still be part of a bull market, and it'll still be a buying opportunity. That's kind of where I'm going with this. Even if we have a big correction in 8 months and it's massive, and we find that the market does a 1,000 point, 2,000, 5,000 big correction, it is still likely to be part of an ongoing bull market. We'll know at the time when it happens. Are the markets kind of on fire right now? Absolutely they are. And the real danger is buying too far away from the weekly moving averages. That's really where the big danger is. Let's have a look at the equities of interest. Apple's still testing that. It did break through that. So this is a traditional head and shoulder shape. And we said that it was likely to, I said it's likely to break through this level, which means, yes, 165 is potentially on the table. Okay, so it is. Let's see what happens with that. On the other hand, Amazon looks amazing. Beautiful correction here, just taking off, just coming up to all-time highs here. So I might want to have a bit of a correction here, but overall, it looks good. I'm not too worried about these. Any corrections now, to me, are sort of welcome. Not from a trader's perspective, but from an investor's perspective, I think they look good. Again, look at this one. AT&T has just come back, testing support off the previous highs, producing some bullish candles. We break the high, I think we can see that take off. It's stuck below this 50-period moving average, so the longer-term trend is down, but the look of it means there's actually people that are bullish on this. There's just a few more bears than bulls. It's kind of like a 55-45 ratio of that in terms of the bears being slightly more in control. So when this breaks above this 50-period moving average and breaks above that, we're going to see it continue to the upside. Looks like that is the case. Let's look at ARK. So ARK, for me, I need to see this breakout. Looks as though it's going to be breaking out of this range over here. Yeah, we're going to have to really go and redefine what we think of as a genius, because a lot of the people that have been glorified as geniuses in the last few years have the worst performing products in the S&P 500. So we need to just be aware of that. And it looks like they're getting lifted by the rest of the market, and everyone's going, see, I told you they were a genius, but we just need to be a little bit more cautious with that. Beautiful. Consolidate. This was amazing. This is actually ridiculous. There was a double bottom here. This is a nice solid level. That in itself is a strong buy signal. But then it came up and consolidated and broke out. So that was a separate opportunity. These were really, really nice. Nice little bit of a consolidation here. This is actually really bullish. Obviously, it's overextended here, but look at this run over here. So potentially we're going to have that. What will probably happen in this situation is it'll run and then just start stumbling a little bit in an area. So probably I'll kind of highlight an area where I think we could see it happen. Kind of just sort of somewhere in this area, maybe a little bit higher than that. We'll see it sort of start to slow down, and then it won't really go anywhere for a while. We'll see. So let's just see how that continues up there. Glencore having dropped through this and really trying to turn around. What's important here is that we have more and more green candles coming in. So I think we're likely to see this manage to push up here. I want to see if we break above that 400 level again coming week. Tesco still struggling in this area, really still battling in this area, but from a monthly perspective, it's still in a good spot. I'm actually going to mark this because this is where I would expect this to turn around anyway in that area. Excuse me. So this is where I would expect it to recover, and at this time, there's nothing to believe it's not going to do that. American Express very much overextended to the upside there. Looks good on the daily, no problem. Again, on the weekly, looks okay. A little bit of a consolidation, a breakout. This is going to be similar. I expect at some point for this to run into a bit of run into a little bit of kind of resistance. Maybe what's going to happen is this year is just going to be this crazy year up until, look, September, we usually have a terrible month. So I think we'll still have a terrible month maybe, and September is where we'll get that correction. And fingers crossed. You want the correction, guys, because the correction is just a pause in the markets. It's not a change in trend. Okay, so the one that did this was a little bit of I'm going to say a lucky call. Last week I spoke about Berkshire Hathaway getting into a danger zone, and subsequently we got exactly in that area. For the purposes of demonstration, that was a nice little response. So Berkshire Hathaway, let's see what happens. The monthly doesn't look that bad. That was the month of February. We could see it actually continue up from here. Again, I would still like to see this do just a little bit of a move down and a continuation to the upside there. Okay. Berkshire Hathaway, in a way, you could argue is just a fantastic index of the overall performance of the market because Buffett has picked a different type of, if we saw it as an ETF and its constituents, he's picked a real mix of different things where he thinks some will perform even during recessions, which is why if his thing is performing well, it's also a good indication of the market. So look at this as well. This is Coca-Cola. This is battling. This is really not a good sign. It's bumping its head up against this area. For now, it's just battling. It's really battling. And last week, it just gave back all the profit. So that does not look good. We need to really see if this level can hold. So Coca-Cola looking a little bit less, and it's stuck within a bigger range. Doesn't look as good. This looks good. BP here is slowly turning around. And again, what happened? Crude oil is looking bullish. Here we've got a breakout area forming. So if you look at this is a breakout area here. So we can, not sure if it'll be this coming week, but we can look forward to a breakout there. We'll have the same on ExxonMobil, has actually already done it. This is an inverted head and shoulders, and it has already broken out to the upside. So that will continue to work its way up to the top of that range, shorter term climbs. General market looks good. It's within its range here. It's starting to break out as well. So there we go. I spoke about that. I was expecting that to happen the week before last. It happened this last week. JP Morgan, a little bit overextended on the monthly. The weeklies look good. Daily looks good. They look fine. There's no real signs of exhaustion at this point in time. This one, growth stocks, looks good. Beautiful consolidation breakout. Very, very nice. A little bit of a consolidation breakout there. A lot of these are really nice 3-to-1 type of trades. So stock traders are going to be making, this is where you've got your opportunity over the next few years to be making your fortunes if you trade with the trend. Shorting the market now, I have no sympathy for you. All the signs are bullish. If you're shorting the market while the signs are bullish, you're missing out on the next, potentially the next bull market. Okay, we've had nothing but bear markets for the last few years. Now it's the bull's turn. So again, no sympathy, and it's not like there are any signs for it. All right, now, consolidation stuck within the range. Can we break out the range this coming week? Let's find out for Adidas. Meta, again, bit of a consolidation breakout. And look, we've got that sort of, we've got that bearish divergence after a breakout, which often means eventually we're getting exhaustion. And so, yeah, a lot of these are overextended in some of the areas. Some of them still look healthy, but I'm looking for corrections. I want to see I'd love to see weekly retracements. But what might happen here is we just keep going, and then when we do have a correction, it's literally a monthly retracement. It doesn't even give us a weekly retracement. It just goes straight to the monthly, and it's a very big correction. That can happen. Here, I was looking for breakouts. We haven't had it yet. Let's see if we get it now. Let's see if we get it to see if that's going to be the case. That's Morgan Stanley. NVIDIA has soared through this area where I was looking for a bit of that correction, which was over here. And that's going to 800. It's sitting there close to that. Will we get it somewhere else? Let's go to 1,000. Let's see what happens at 1,000. When it goes parabolic, the swings just go ridiculous. So in other words, I wouldn't just do small increments. I would do a big one because it's going at such an astronomical kind of rate. Then we have Netflix. Also had a consolidation and a retest, so that still has some room to the upside. That looks okay. Plus it's coming up again, all-time highs. So a lot of these have got some free run. They've passed a lot of resistance and they're potentially looking to move higher. Then we've got PayPal. PayPal's potentially forming a bit of an inverse headed shoulders here, which means a possible change in trend. Let's see if that's going to be the case this coming week. Spotify, again, just look at that steady buying. It is parabolic, guys. I'm not disputing the fact that it's parabolic, which implies there will be a correction at some point, but that could still be 6 months away. And again, we're still within a bull market. So just kind of, I feel like I'm a bit of a stuck record here. For traders, any kind of a pullback on the daily becomes a high probability entry into, for a shorter term trade, to the upside. For investors, it's very tricky, because for investors, I'm going on about how there's a bull market, but actually the opportunities lie in the weekly retracements. The safer stuff is when you get a consolidation or pullback on the weekly and it continues up. If you're an investor and you get it on the daily, we will have a weekly correction maybe in 3 months' time, for example, and then you'll be back down 3 months later or back below where you bought in and you'll be very frustrated. So for investors, usually the weekly retracements into the moving averages are the best opportunities to get in. For traders, the daily tends to be working fine. So that is a big difference between traders and investors. Inverse head and shoulders for me has a possible change in trend. So FedEx starting to look more bullish here. I would expect that to go a little bit higher. That's good. Let's look at Tesla. So Tesla, you know what's interesting is this doesn't look the same on different as it does on some of the other platforms as well. It does look as though it's trying to produce a level of support here and push up a little bit higher. That was, I mean, a bit of a weekly candle. It's interesting to me because Friday closed near the lows. I've got some different stuff here, but this looks like a change in trend. That's a bit of a consolidation. So here you get a consolidation and then you get a breakout of that. So just highlight this little bit of a range. Very higher probability we're going to break out to the upside. Not guaranteed, but higher probability. Let's see. We've got to get above that 50-period moving average, and we have to get above all these moving averages, so there is still some resistance. And don't forget this downward sloping trend line. So there's a lot for it to kind of have to work its way through, and we'll have to see how it gets there. So again, don't forget, Tesla stuck between these highs and these lows. It's actually stuck between a medium and longer term uptrend and a medium and longer term downtrend. It is in a zone. It does not have any clear direction just yet. Vanguard ticking along, so very similar. So look at Vanguard versus QQQ. Let's go back to that one, this one here. Just super healthy. Obviously, some of them having the same sort of constituents. There's lots of areas where, you know, depending on who you follow, where the concerns are that if you had any kind of toxicity had a creep into, say, the S&P 500, because there's duplication of money invested through ETFs and various other instruments, that therefore, if anything, you know, fell apart with those, it would just impact everything. That could be one of the new black swans. We'll see. But right now, that just isn't the case. Okay, we got Walt Disney. Walt Disney looking really good. Consolidation here. I'd love to see a consolidation and a breakout. Disney looking very good here. This is a significant level, ladies and gentlemen. It's significant. Once we break through this, it's very high. It's like a 75% probability that it's going to continue up to the highs. It's not guaranteed, but it's a greater chance that it's en route back up to the highs than anything else. Let's look at bonds. So bonds starting to push back up again. I was saying to you that there were early signs, especially when we look at the EURUSD, that it is trying to turn around. And so this is the very first pullback in a potential new uptrend. So that's what I want to kind of look at. Are we going to see if that's going to be the case? Now, it's interesting because we can see bonds starting to get a bit of loves when there's a bit of fear in the markets, and therefore they want to move away from stocks towards government bonds, from private companies through to government-backed securities, and we want to see that. But could that happen in a good market, healthy market situation? Yes, it could. Why? Under which circumstances would people be buying bonds if they were happy, if they weren't nervous about the market? They'd be doing it if they needed to diversify their portfolio. If they put enough money into stocks and they've put all their money, because remember how many billionaires we have now and how much money they have, and they've put it into cryptos and they've put it into everything. What else have they got left? They got bonds. And in their brain, they're going, well, the bonds will pay off if the market goes bearish. So you could still find yourself buying bonds even if the market is bullish. Those are the circumstances under which it would happen. And given what the conditions look like now, that would be my explanation for seeing movements to the upside here. Bonds have never been cheaper, and therefore, to a lot of people, it just doesn't make sense not to buy them now. Cryptos. Obviously, look at cryptos, boom, right up into these highs here. So we're back into these sort of historic highs and have had a bumper period now. They've also gone parabolic, so we've got a bubble forming here, a little bit of a bubble here. It's not the same. It is a bubble. You can have I just want to point out here that you now have institutional money going into cryptos over the last couple of years, which you had prior to that. It was almost certainly just retail kind of fervor would be the word I would use. Now you have a little bit of other money coming in, which shows a bit more faith in it. You're seeing cryptos are starting to take hold and be accepted sort of more globally. It doesn't mean you can't have a bubble forming. You can still have a bubble forming. If anything, it's probably still driven by the retail markets. So just be prepared for that. Is it overextended by now? Absolutely, even more than any of the other charts I've looked at. Even more than any of the other charts I've looked at. Be aware. And the people, remember that a lot of the people who have the most money to buy this have the same power to dump it. So if you suddenly see a big drop in price, it could be a billionaire that decides to get rid of it. I'm not trying to be pessimistic. I'm saying these are the facts. These are the people engaging in the markets. It's not a conspiracy. I'm going, there is a point to take profits, especially if you know it's going to have a correction and you can buy it again at a cheaper price. That's just a strategy. That's kind of what everybody should be doing, but that's just how it goes. So just be aware of it. It is at all-time highs and therefore, and it is overextended. So it is going to battle this area. In principle, do I think cryptos will continue to rise this year? Yes, I do think so at this time. There's very little signs to show that that isn't, that there's anything kind of fading there. So we arrive at the end of this week's analysis. Are things decent and good so far? Yes, they are. Are there reasons to be optimistic this year? Yes. Do I think the markets are not just strong, but a little bit too optimistic, a little bit too aggressive? Yes. I feel like there are a couple of bubbles here and there forming. That doesn't necessarily mean we're going to have a bear market. It means that we're probably going to have a correction within a bull market. So I'm not afraid of that. In fact, that's part of the normal. It does feel as though the tequila and the punch bowl this time is not necessarily coming from central banks to stimulate the economy, not at all. It's coming from fear and panic of missing out, FOMO from retail market as well. One thing I would add in here though, is that you could see a rate hike. So just keep in mind, a lot of people are like, no, we'll get rate cuts. And that again doesn't make sense. You only get rate cuts if you need to stimulate the economy. We don't need to stimulate the economy. The market's on fire. Most economies are doing fine. So we're actually more likely to get a rate cut. A rate hike, I beg your pardon, a rate hike. We're much more likely to get that. So just accept the possibility, ruminate on that for a bit, that yeah, if the market's on fire now, it actually makes sense to calm it down a little bit as well. One of the things I'd rather see them do instead of a rate hike is to see some form of policy change with regards to corporations. That would actually be better for everyone, but I don't know how you would go about doing that. That's not my area of expertise. Ladies and gentlemen, thank you so much. I really appreciate your support in these shows. I hope you enjoy the content, and I will see you in the next week one. I will see you for that one next week. So thank you very much and have a good week.